Hi, my name's Kevin Hebbel, and today we are going to talk about corporate consolidations. The goal for today's session is to really talk about how you can shorten your close cycle and provide you an overview of the corporate consolidation process end to end. So to get started, let's talk a little bit about a definition of corporate consolidations. So a consolidation is the process of capturing the financial position of an organization by aggregating and applying financial rules to financial data to present a consolidated set of financial statements. Any large company has to do this. It's common practice, especially when you're dealing with a lot of subsidiaries or a lot of companies that are rolling together to produce financial statements. And we'll walk through that process end to end today. So for starters, this image here walks through what that could look like for an international organization. So you may have multiple entities, company 1, company 2, company 3, company 4. They may have different currencies. So you could have a USD entity, a European entity, and a British entity that are essentially rolling together into parents and ultimately up to the top consolidated parent. And that set of transactions creates a lot of challenges in the financial close process. So we'll walk through some of those challenges and ultimately the end goal, which is to get to your SEC or your internal and external reporting in a clean and unified fashion. So common challenges that we see when you go through this process are a lot of companies are still using Excel. They don't have an automated process or a system that really rolls you from that source information up through to the financial statements. And Excel-based processes are typically error-prone. So a lot of manual input, a lot of people in spreadsheets that are manipulating data, and it creates a lot of uncertainty in the financial statements. The process usually has a lack of visibility and control. So because of that, because of the manual touch points, a lot of hands in the various components of the financials, there's a lack of control. And ultimately what that leads to at the end of the day is audit issues. So a lot of our clients that we work with really before we put financial systems in place, they're in a position where they've had deficiencies in their audit and they need to improve their process end to end. That's really ultimately what we're going to talk about as we work through this whiteboard today. So moving on from common challenges, some of the primary considerations for whether or not you really need a consolidation system, right? When you look at the landscape of whether or not Excel or a simplified process is good for you, if you need something more complex, you need to consider whether or not you do have multiple currencies, because along with that, you get things like CTA calculations and FX. And when you're producing your cash flow statement, it's a big challenge to do that with many entities in multiple currencies without a system in place to do that to support the consolidation process. If you have a lot of intercompany transactions where you have businesses within your portfolio or within your company that are interacting with each other, you can use a consolidation system to really automate that process and get to a good place where you don't need to do that piece manually. The cash flow process is one, I brought this up earlier, but it comes up frequently where companies cannot properly produce the CTA, the FX fluctuations that they need to in their cash flow statement without a system that can do that. Multi-GAAP. So many companies that we work with, they aren't just reporting in US GAAP. They also may have IFRS reporting requirements or statutory reporting requirements. A good financial system gives you the ability to look at your data in many ways. So you can look at it in any of those really by toggling a button on a financial statement in a report to view the data in different ways. Another challenge that we often see that leads to this consideration would be the need for topside journals. So are you layering in adjustments that are more the corporate adjustment variety, something that happens with your core financial and accounting team? And if you are, again, the system can control that. It can control the security around that component of making adjustments to your financial statements. And finally, the last primary consideration is reporting. So most companies that we work with, they have many different reporting needs, right? So they have the needs of the insiders of the organization, management reporting needs. They also have the needs for the external users of the financials. So whether that's the SEC or other external sources they need to report to, the consolidation system really gives you the opportunity to report every way that you would need to systematically. So let's talk about the basics of a consolidation system. We talked about a lot of the defined consolidations. We talked about a number of the common challenges and also some of the primary considerations. Now, if you really get into the basics of a consolidation, what does a consolidation system do? If you think about a scenario like this one, where you're a parent company, you have many subsidiaries that you own, the consolidation gives you the ability to take that data in from source systems, oftentimes from multiple GLs, and take that data and bring it into the system in a unified fashion. So usually there's the GL component, the local ledger component. That data gets brought in through a transformational process, usually an ETL tool. And that ETL tool combines the data, puts it on a single chart of accounts, and ultimately allows you to view all of the assets, liabilities, the equities, the debits and credits. That full process comes together into your consolidation system. And your consolidation system is really where the magic happens, right? So that's where your consolidation adjustments get layered in, where if you have any minority interests or you have companies that are partially owned, you can automate those transactions to make the journal entries post automatically. You can layer in your journal adjustments, your security. That's all going to be handled within the consolidation system. So it's a unified place for you to do all of the complex consolidation processes that you need to do during your close cycle. So when you do go through this process of implementing a consolidation system, there's a lot of benefits. Our clients have yielded tons of benefits from this process. And mostly, really, the number one thing to focus on is time saving. So most of our clients usually save between 30 and 40% on their close process end to end when they go through and do this. We've had a client that really moved their close process from 12 business days down to 6 just by putting a system in place to support all the manual processes that they were completing previously. Other benefits, again, control is a really big one, especially in accounting. You need to have an environment where you understand the data as it flows from source system to your reports, and a consolidation system is really going to give you that control. Going from manual processes, hands on keyboard, to processes that are more automated is another key benefit that our clients realize as they go through these transformations. Again, we talked a lot about Excel, dependency on Excel, getting away from that and getting more into where you're really just using Excel to retrieve data or to report and not to actually collect the core data in the financial statements is another key to benefit of a consolidation process. And then finally, today, what you're seeing is a lot of move to the cloud. So less involvement with IT, more control in the accounting and finance organizations. And the consolidation systems that are out there today, they all provide that benefit. You can use the cloud, you can implement quickly, and you can get to a place where you have a lot of control over your financial processes end to end. And then finally, you go through and you take a large step and you move forward and you decide that you want to put this consolidation system in place. You yield the benefits. What does that ultimately get you? Well, it gets you more time, right? Time to spend analyzing data, time to spend on more pressing financial needs, on moving the organization forward, and not on just combining your data and everything that comes along with the manual processes that you had in place before. And that gives you the opportunity to consider other things, other process improvements like planning and forecasting, data modeling, BI, tax provisioning. You can take other components of the business and consider moving those into a more systematic approach and something that's going to be beneficial for your business overall. So that's all I have for you today. Just wanted to walk through the consolidation process end to end. If you have any questions, feel free to reach out to me. My email address will be in the landing page on the website for this video. Thank you.